Hello again, everyone. This is just a very quick update on Clean Energy Fuels and their June quarterly earnings, which came out at the close of trade yesterday. On the surface, they looked quite appalling, but if you dig deeper, they are actually decent for the company. So in this video, I'm just going to unpack the main highlights of the results and show you why the almost $80 million loss they reported is much better than it looks. So let's get into it. So the results release was headlined with Clean Energy Fuels reports 101.4 million gallons delivered for the second quarter of 2021, which is a good sign as it compares very favorably to the June quarter last year and represents about a 10% increase on what they delivered in the March quarter of this year. So definite signs of the company realizing greater scale in these numbers. So you would expect to see a big jump in the sales revenue for the quarter, wouldn't you? Well, if you did, you would be hugely mistaken. As you can see, Clean Energy Fuels actually reported a nearly $80 million net loss for the quarter, or negative 38 cents per share. This would be quite a shock on the surface, as there were expectations of breaking even this quarter for the company by analysts, which I discussed in my lengthier results preview yesterday. However, given that from an accounting point of view, the losses look dire, most of this is attributed to the raising of stock warrants for Amazon. These accounted for a $78 million loss for the company, so that leaves the question, what is the warrant and why is it hurting Clean Energy Fuels so much? Well, a warrant is basically a promise to buy stock in the company in the future at a nominated price, so this expense will eventually be changed for cash in the future when Amazon executes the warrants, i.e. buys stock in the company at the $13.29 per share mark, which we have spoken about at length in the past. So while this is accounted for as an expense, it is a non-cash expense and doesn't actually hurt the cash flows of the company, just like the stock-based compensation for board members. So when the earnings are adjusted to account for these other significant non-cash expenses, we come up with the non-GAAP income, or non-generally accepted accounting principles income. So from a non-GAAP perspective, Clean Energy Fuels has actually beaten analyst expectations of breaking even and has officially reported their first profitable quarter since before the pandemic, with a net income of $1,759,000. So I think this is good news, which was backed up by the CEO's opening lines of the conference call, where he emphasized that this was a better than expected quarter. He also cleared up that removing the non-cash accounting expenses would have seen sales of $79 million for the quarter. So a very strong quarter from Clean Energy Fuels. And that averaged out to earn shareholders 1 cent per share, much better than negative 38 cents. Anyway, I'll leave it at that for this short update. The reality is that this was a better than expected quarter for the company and is a sign that it is on the right trajectory. It has renewed my faith in the stock and as such, I will continue to accrue more of the stock going forward. Anyway, what do you guys think? Was it pleasing to see a profitable quarter for the company, or did you expect it to be an even stronger result? Let me know in the comments below. If you would like to see more Clean Energy Fuels or other stock related updates, I would encourage you to subscribe to the channel. Also, by doing so, you are helping to support the social enterprise initiative I'm aiming at transforming this channel into. The concept of which is that by watching YouTube videos, people are helping to make a difference to some causes that I, and I'm sure many others, are passionate about. So I encourage you to join up and be a part of that. Until next time, guys, may the markets trade in your favor. Cheers.